Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. You know what? That intro thing went a little faster than I thought it was going to. Guys, it's Tuesday. Interest rates are significantly higher this morning, given PMIs in Europe kind of suggesting that there is still some work to do on inflation. And I'm starting to think that this could go to 4% again. Let's pull up some charts here. We did just get Canadian economic numbers here. Not too much of a reaction from that. Fed's Logan speaking, and then we have our own PMIs at 9:45 Eastern time, new home sales, etc. So that's kind of the game plan for today. But if the yes, there was also the whole debt ceiling thing. Sounded like there was some progress yesterday, but we're still kind of in limbo. I don't think that we're going to get too much this morning from that, but we will see. So I think that the game plan has to be continued selling. Of course, depending on the PMI. But here's the treasuries. They're pushing down, and we get to the point where we have to come back and look at this, and we are like in no man's land now, right? So only a hop and a skip back to 4%. Here's ES kind of struggling as a result. Oil moving higher today, though. I believe there was a statement from the Saudi oil minister warning the speculators, saying, and I think that he was warning them that like the price isn't going to go down, but I can't recall. I have to look that one up again. Gold and silver also struggling as the interest rates go higher. It doesn't look very good at all. And then we got Kappa also moving down today. Interesting. Oh man, I thought I was like over the cold today, but I'm hearing my voice and it's like still kind of the dollar moving higher as the interest rates move higher, and Bitcoin actually moving up. So that Bitcoin seems to be defying the rest of the currency interest rate complex. I would think that it would move down. I'm a little suspicious of that move over 2,700 as a result. The 8-week T-bills low rate was 0 again. I'm not sure what you mean by that. Oh, we have a 2-year no auction today also. Okay, so it looks like we had a little bit of a push lower and a bit of reversion. I'm gonna try blowing my nose here. They are not giving this thing any room to breathe whatsoever. Jeez. Wow, crypto giant Binance commingled customer funds and company revenue, says Reuters. Oh, that was a big little move up there. There's a lot of volume on it too. A big offer that was cleared and a big bid. Okay, so I really want to get long interest rates. Ugh, my voice cracking. I'm like 16 again. I really wanted to get long interest rates, and then there was this little impulse higher, and a lot of volume. And when I'm seeing big volume on both sides trade like that, and I don't know why, that is like a big red flag for me to not get involved. Like, there are two big guys in there, they're fighting with each other. I can try and help them resolve it by like scalping between this tick, but for a speculative trade, that is maybe a warning sign to not get involved, which is unfortunate because I do still think that rates could go higher today. Let's hear, did we have a number that I missed? No, why am I seeing here stuff about Philadelphia Fed Manufacturing Index? Yeah, whatever. Sean Hannity retweeting about the fake AI generated photo of Pentagon explosion. I want to see where the image originated from. Okay, see them slide back down after that iceberg bid was taken out. See, like, the issue I have with this is, like, one side could be saying, oh yeah, we want to sell the treasuries because of higher rates. There could be somebody else that knows, like, some political news is about to drop or something like that, right? Somebody's willing to put up that much. I've got to be careful. Yeah, then the cumulative delta is just a little wild here. It could be stirring the pot. It ticks back up. And look, there's like lots of selling and iceberging there at 05.5. Again, AI has my mom terrified. I really think that the whole AI thing is overhyped. like look, I'm a computer science guy. I've been dinking around with these models before the ChatGPT thing took off. I've messed around quite a bit with ChatGPT. I'll use it occasionally, but like the thing that I keep finding is that ChatGPT is not relevant to the things that I do at my job. So it's kind of funny because you know, like, ChatGPT only sees what's already out there on the internet. Those are like problems that have already been solved, and like if what you're doing at your job is like just implementing systems that like are like common and everybody else has already done, and okay, but like that's usually not the case. Like, usually those systems have already been written. You're doing something that hasn't been done before, and so there's not really code that can do it, right? Like you still have to know what you're doing. So it hasn't affected me yet. And in fact, I keep running into these situations where it's like that you know, I'll need like a piece of code, and that would be like, oh, we could ask ChatGPT, and they just happen to be the applications that ChatGPT are like really awful at, like trying to create a regular expression or something like that. Now, what's going to happen is the jobs that are replaced, let's say, by ChatGPT, it will go from, you'll have like 10 writers, like I think business writers, those are probably a group of people that probably should be concerned, right? You might have like 10 business writers on your team, and now it can be done by 2, right? So that's 8 people that you don't need. Sure, those jobs are going to go away, but there's going to be so much more business because of that as well, because the productivity will have increased so much. So those 8 guys may be able to just go and, you know, be one of those 2. somewhere else at a new company that pops up because of all of the productivity increase, right? You have things like that, where you could see that certain role will contract, but that industry will grow so much that the people that kind of get replaced are okay. You can see a lot of things like that. I really don't think it's the worry that a lot of people make it out. And the jobs will just move towards the things that ChatGPT can't do, which is a good thing. It means that you don't need as many pencil pushers anymore. People hate those jobs anyways, right? You get to go and do a job that's more creative and stuff. It's good. You can't have, I mean, this economy where like, you know, the rich own the AI and like the rest of us are struggling, and, you know, it's an economy like that can't work. Okay, that's the way that like third world countries are, right? And those countries don't have very good economies, right? It's in order for you have to have large scale economic participation, and that will continue to happen in the West. It's kind of interesting. They put a stack there at 05.5 now. Well, a bit of it pulled when they ticked down. That bid there at 06 is pretty insistent, though. Hey, good morning, Walter. And good morning, Alfredo. Turnaround Tuesday, well, I don't know about that. I mean, wasn't yesterday like an okay day in stocks? I forget already. Yeah, yesterday was an okay day in stocks. Uptick again. And not as strong of a bid, but still okay. The Trader Pro Academy keeps the email. I get those emails too, and I don't know what it was that I put into that put me on their list. There's been a couple of marketers in the futures trading industry that for whatever reason became like really aggressive after like March. They say they teach order flow, but I was in their room for 2 years. Well, a lot of people think that volume profile is order flow, which is kind of funny, right? I mean, really, we shouldn't refer to order flow as like a school of thought or a type of strategy. Really, to me, order flow is the data, right? But you can construct a volume profile without order flow data, right? Because order flow is data informed by the order book, is what I consider order flow. So volume at price, you can construct volume at price without the order book. As far as I know, you're the only one who teaches order flow in a live stream. I might be. I'm definitely not the only person who like talks about order flow, but on a live stream that might be the case, yeah. Right. And I'm definitely the only one that talks about order flow from a scholarly perspective, refers to the scholarly works on the subject. I think that once a long time ago on a Futures IO webinar, somebody gave a presentation that kind of got into this stuff with the liquidity holes and so forth, right? But they didn't really give the people in the webinar enough information to kind of understand the research that it was coming from and stuff like that. You know, like they digested it too much so that those people were not empowered to be able to go and find the research themselves and find other research, right? Look at that. 3930 at 06. I'm really glad that I didn't touch this, even though I'm really scared that it's gonna move. Well, so far I haven't been able to like blow anything out of my nose, so that's good, right? That means I'm getting better. Maybe I just need to keep talking and, you know, loosen things up a little bit and we'll be good. I really thought by this point that we would maybe be seeing interest rates move another rung higher, and then we would be talking about the Federal Reserve and interest rates and stuff. I had this whole train of thought all planned out in the shower, and now I'm kind of like, I guess we could still probably talk about it. I'm having a hard time getting away from 06.5 though. Let me just check in here. Oh. Trump campaign stenographer Tara Palmieri wrote a thread making it seem like DeSantis ran away from her because she was asking him, quote, tough questions. She didn't realize the DeSantis team had recorded her questions, which were mostly badgering him about Disney characters. Okay, no, this one is actually like really super effing interesting to me in the political arena. Donald Trump has decided to attack has decided to attack DeSantis from the left, basically saying he shouldn't be picking a fight with Disney. I think that it could be more of like a reflex from Donald Trump. You notice that Donald Trump kind of has this like approach to media. He understands media, and like if somebody goes after him that he thinks has a better media profile than him, he will just kind of run away and hide. He'll avoid it. Okay, so like if Kathy Griffith attacks him, then he can just call her a nasty woman and all of these because nobody likes her, right? But if Eminem goes after Donald Trump and makes a whole big deal about him in his album and stuff, Donald Trump just doesn't say anything because Donald Trump doesn't think that he is as popular as Eminem. Doesn't want to attack Eminem. See what I mean? So under his kind of framework, the top of the media empire's, you know, pyramid is Disney. So you don't go after Disney. The issue though is that Republicans right now are very unhappy with Disney. So even if I don't know if I kind of feel like on the DeSantis versus Disney thing that in the end DeSantis kind of wins. Like it had an impact on Disney. Disney had to make different decisions than they would have liked, etc. Like Disney is incurring a cost that they'll have to consider in the future, even if it ends up hurting DeSantis in the long run. And I don't know how much it will hurt DeSantis in the long run, but I don't know. But is the Disney versus DeSantis issue really going to be like a key issue in the Republican campaign? Because right now, Donald Trump is acting like it is, and that's what they're attacking him for. And that seems like an attack that is not going to help him amongst most Republican voters. So now all of a sudden you got this thing where like the narrative turns into Donald Trump is the party outsider that's really actually a Democrat, and DeSantis is the real Republican, sort of a thing, which I think would really hurt Trump's base and kind of hurt, is because that's the opposite from what it was. Before, it was Donald Trump was an outsider upstart that coalesced like the far right, and he had this like really powerful strong base that loved him. If you lose that base part that is like the super conservative side, I don't know if it works. Still trying to understand stocks and bonds relations. It says they have a positive correlation in an inflationary environment, but a negative one in a deflationary environment. That's not strictly true. But this year's, we had inflation and deflation, and stocks and bond prices are still negatively correlated. Okay, so definitely over the last, like since 2021, the correlation between the two of them has been positive. The problem that you might run into when you're trying to read things online is that you don't know if they're talking about bond prices or bond yields, right? Because as bond yields go up, stocks might sell. But that means that treasuries are selling, right? That's why I'm saying it's positive correlation. So that might be part of what's messing you up, right? But really, I think that you're trying to create a heuristic in your mind that is a little too simple, right? You can't just say, here is the environment. This is the correlation between the different instruments that you should see, right? What you need to do is you need to say, here's the environment, and here is how this individual instrument tends to respond to it, and this individual instrument tends to respond to it. Okay, so if we're having high inflation, then what do we expect to see for the treasuries? For the treasuries, it's very simple. Federal Reserve is going to raise rates. We're going to see interest rates go higher and treasuries sell. Okay. Hence, this morning, we got hot PMIs from Europe. Treasuries sold. And and as a result, interest rates are 5 basis points higher than they were yesterday. Okay. That one's pretty easy. Okay. Equities aren't as directly affected by that necessarily. Okay. So there can be a situation where equities, we're in a high inflationary environment, but equities are okay, right? If we're having inflation, but it's not affecting companies' bottom lines, then stocks can actually kind of be a way to protect yourself against inflation, right? But in this last episode of stuff that we've had, it's been very bad for earnings. It's been very bad for valuations because stocks were like way overvalued too, right? And so the higher interest rates has been bad for stocks. And so what do you get? You get sell all the things, right? Right. But there can be these periods where they're inversely correlated, right? Where you can have a market, the normal market that I've never really seen directly. I mean, as a kid, but the normal market, which is that interest rates are slowly rising as the equity market continues to be really, really strong, right? Inverse correlation. Stocks are doing well. They're raising interest rates as a result. So treasuries sell, right? So I'm not, I'm figuring out the correlation afterwards. I'm saying, okay, this is how this is going to affect this instrument. This is how it's going to affect this instrument. And that's what? Those are opposite of each other, right? And then I'm going to come over here and I'm going to look and I'm going to see, is that actually what's happening? So like right now, the treasuries have moved, the interest rates have moved about a basis point, right? Has the equity market moved? I'm going to say not really. Right? So at the moment, the correlation, you're really not even seeing it. Yeah, just ignore these because they're trying to give these heuristics about what we do, especially when we're on such a short time frame. What we do has to be a lot more nuanced, right? So the model that I want you to drill into your head is orders move markets. How will this piece of information result in orders, right? So when we have PMIs come out and the PMIs show that prices are going up, there's a prices component to these PMIs that get released. So when we see that those PMIs are going up, what orders is that going to result in the treasuries? Well, people are going to see that as data that the Federal Reserve is going to be concerned about and cause the Federal Reserve to raise interest rates. And so overall, the treasuries, you're going to see the treasuries sell. Okay? That's how we should approach it. Yeah, but you understand that the correlation is like the result of the orders, essentially, right? Like what causes a correlation is when two instruments are seeing orders come into that market from the same piece of information, right? And depending on the environment, same piece of information could result in different sets of orders, right? A lot of it depends on like what the market is concerned about, right? So right now, higher prices, treasury market's really, really concerned about that. Equity market is not as concerned, but there could be a market where equities could be really sensitive to that. If that was the thing that the equity traders thought was the most important piece of information for them to determine what earnings were going to be, right? But this is where it kind of gets messed up, is that for the past 10 years, just remember, the past 10 years or so has been an aberration in financial history where beta matters more than alpha. What do I mean by that? So alpha is like edge. It's like, okay, here's the index, and if I'm trading and I made 5% more than the index, then my alpha is 0.05, right? My alpha is 5%, more than the index. Okay, beta is like everything kind of moves. So like, if the S&P 500 moves up, some stocks are smaller and so they're going to move a little bit more, right? But it's not like edge that is derived from the person. It's edge that is derived from the instrument, the extra volatility of the instrument, right? And in the environment that we've been in, okay, like tech stocks have high betas. And when the market is basically, the money is coming into the market from the Federal Reserve, that money goes into those beta stocks, and so the best edge that you've had is just to be exposed to the beta, to be in the tech industry essentially, right, for the last 10 years or whatever, right? And picking stocks doesn't matter as much. Just buy the NASDAQ instead of the S&P 500, right? That's not the usual dynamic. There's another small little tick up. They haven't been able to clear 07.5, but and it actually has been a little bit quiet since we started seeing this buying. After extolling the merits of DeSantis, the billionaire, Elon Musk now seems to be interested in another GOP presidential. Hopefully he's shopping for a candidate for the 2024 US. Yeah, but who would he pick? Oh, wow. Here's a quote from Ken Griffin. I'd like to think that the Republican Party is ready to move on from somebody who has been for this party a three-time loser, Griffin said, referring to the Republican Party's poor performance in the 2018 midterm elections, Trump's own defeat in 2020, and the GOP's worse than expected performance in the 2022 midterms. Elon Musk, at the time the richest man in the world, was among those who saw DeSantis as a winner if he was chosen by Republicans to be their candidate. Tim Scott. These and other remarks made by serial entrepreneur and CEO of Tesla clearly suggested that the governor of Florida would be his champion. However, the Techno King's recent activity on Twitter, social network he's own, suggests that Musk is still shopping. On May 19th, he praised South Carolina Republican Senator Tim Scott after he filed the paperwork for a presidential bid. So should I be rating Tim Scott higher on the... I guess it kind of puts him on the map, doesn't it? Well, looks like they did touch 8. Okay, so I'm getting a headline now from a Republican negotiator for the debt ceiling talks saying that they're still very far away. So this again is where I come in that like somebody might know things about the debt ceiling, because I felt like there was some pretty impressive holds there that really didn't make a whole lot of sense. So Juan, when you post a link on YouTube, it doesn't show it to us. It hides it. You have to put like spaces. You have to remove the periods and replace them with spaces. It's kind of rough because YouTube will show you the message, but it doesn't show you that it got blocked and that we didn't see it. It like shadow deletes your message. Still far apart on debt ceiling deal after Monday night talks. That's a little different than what McCarthy said. So I missed what you had said earlier, Juan. You should test total cancellations at each price level on limit orders, and you'll be surprised what you find in the puzzle. Well, okay, so something that I have found in my studies, because I have all of these indicators with the order books and I can kind of do statistical studies on them, is that in general, price will tend to move in the direction where there's the most cancellations. But I think that has a lot to do with just like there's all these people waiting in line and they can see the orders coming in a certain direction, and so they cancel their orders. But it is ultimately, it's like that interaction between market orders and limit orders. And so it's kind of like when the market makers jump out of the way in a certain direction, it lets it go that way. And so that generally tends to be the direction price goes. So that's why it's actually just as important, if not more important, to watch for, you know, when a bidder offer cancels unexpectedly. But another issue though is that you can't, it's hard to differentiate between cancellations and market orders. So Lowe's reinforces wavering home improvement demand with forecast cuts. You know, I find this weird that Home Depot and Lowe's have done like so terrible in the last quarter, because like I've been going to those stores more than ever lately. Like I'm getting to the point where like I recognize all of the employees and stuff. Then you're like, should I start memorizing their names? Even though like it has been pretty strong bullish action, it's only a teeny little pullback, and they haven't really been able to hold the way yet. So I definitely don't see the support I would need to be able to like take a long. I wonder if I should be making my political videos again. I think if I did it on YouTube, I'd want to make it as a separate channel, but last election, I kind of did stuff, and I thought it was fun. I don't know if, man, I think part of the problem was last election, like nothing ended up mattering because of the way that things went, right? Like halfway through the campaign, COVID became the primary issue, and then that like screwed up all of the primaries, and everything else before that didn't matter. From levels 0 to 10, the number of cancellations and additions is greater. For levels 10 to 50, well, of course they are. Right? The people who have limit orders closer to the price are going to be more interested in changing their orders than the people that have them like really far out. Like honestly, think about it. Yeah, like if somebody that's like 50 ticks away, like these guys that have limit orders at 113.23. Why do you think he has that limit order there? Right? It's merely for providing liquidity. It's merely for if price were to get there, he'd have the front spot in line. And I don't know, man, if we were to get all the way up there today, I don't know if you'd want it anymore, you know? So yeah, you get a lot less orders moving up here than you are closer to here. And you could show that with my indicators because they have a filter on it for positioning. So you could go in and you could add the indicator and show the number of cancellations and limit, you know, add it to the chart twice and have one only show 0 to 10 and then the other one show 10 to infinity. I think you're going to find, though, that it's these orders that are like right next to price that are the biggest kind of indications of what's going on. These, what's going on the book on the like the inside 2 or 3 levels is, should almost always closely match price. GOP negotiator McHenry, I'm not sensing urgency from the White House in debt talks. BlackRock Wei Ali says Goldilocks era is over for I agree. The Goldilocks era was when like interest rates were low enough, but like not, there wasn't like some crisis, and so it just kind of, the markets could grow and grow and grow. Just right interest rate policy, yeah, but not anymore. That's over. Okay, that was from Fed's Logan. So Fed's Logan is speaking at the moment. He was saying something to the effect of like banks should be ready, you know, and willing to borrow from the Fed if they need it. I don't think that he was necessarily trying to say anything apocalyptic or anything. I think he's just talking like really pedantic things. The speed of transactions has highlighted the need to manage liquidity risks, and every bank should be ready to borrow from the Fed. Right, because it could just be like an instant and all of a sudden your bank is going under. Okay, so apparently we're going to get more stuff on Debt Talks at 12:30 Eastern Time. Okay, there's finally a significant uptick. Ooh, wow, and maybe some stop runs at 09.5. That's already not playing out the way I anticipated. Oh. Treasury asks federal agencies if payments can be made at later date. So they're already trying to reserve cash. Okay. That little scalp seems to be working. I think I'll cancel that one. Maybe put it there. Let's see. I do think there was a stop run there. I mean, that was a pretty big jump from 26 to almost 30. So like 5K contracts, I think, puked there when they like crossed the seller base cost basis and so forth. So I see a couple of big orders stacked above us, as they often do when we're coming into kind of trending action. Okay. Below resting liquidity at 10.5. Down tick. It's still fairly free. Seeing big move in the dollar here. The dollar is getting crushed. I think that this is because of the debt ceiling negotiations. And S&P 500 is falling. So I think that what we may be seeing now is a flight to safety trade. This is not like, you know, with these debt ceiling negotiations and everything, we've been seeing moves that were like very impulsive and quick and everything. This one has kind of like been a little bit more of a slow burn and a bubble up, but still going. And it looks like it could have legs just because it's like a retracement of the overnight PMI news and all that, right? Although the order book should surely be recovered, and the dollar kind of broke the last pivot down here, didn't it? Okay, that's, oh shoot. I was a little bit slow on that one. I should have been paying more closer attention. So when I get a move like that, the thing that I'm worried about, the thing I'm looking for is somebody hitting back the other direction. So if I come up and it pauses just a tiny bit, and then I see it tick down and that offer is strong on the on the down tick, you know, and especially if it does like 2 ticks like that, you know, that to me is a possible sign of somebody trying to hit it back the other way. And with as fast of a move up as we had, well, you could be watching for those, because that could be the perfect opportunity for somebody to really come in and hammer it. On Trading Floor Audio, as funds run short U.S. Treasury ask agencies if payments can be made later. This is a really interesting one, is the whole thing that when is the drop dead date, and everybody is just assuming that it's June 1st because that's what Yellen said, but we know that number is conservative, and all of the analysts looking at it have said that they'll probably be able to make it 1 or 2 weeks further than that. And I wonder if that is being priced into the market, if at all, and what it would actually, what pricing that in actually would mean. It probably doesn't matter to this move that we're seeing right now. The thing we got to be careful about though is, so one thing is that this appears to me to be an okay place to try and hit it the other way. Like if we want that interest rates are going to go higher, especially with like, look, we got PMIs later still, right? 374, not bad, not bad. But there could be more from this debt ceiling thing. Like people could be saying more stuff and things. I don't know. I think that I'm seeing a little bit more order flow come out as we heard from those Republican negotiators, but a lot more than I thought. Yeah, Kool-Aid, we've been talking about that a lot lately. Wait, weren't you here the other day when we were talking? I guess you were maybe like here for part of the stream, but not when we were talking about it. But yes, Robinhood expects to launch futures trading late in 2023. They're applying to get a futures, futures clearing license. And it seems to me from the brokers that I'm speaking to and the platforms and the decisions that they've been making that they are all kind of trying to prepare themselves for this, that they're all anticipating an increase in the amount of retail futures trading activity in the near future. So I think absolutely there's a good chance that we could see more traffic from this, yes. NinjaTrader in particular seemed to be moving very aggressively in that direction. And really, NinjaTrader and Iron Beam are probably the best positioned for it with their web platforms. Web/mobile platforms. So I was looking for like, you know, pushing against this move, and I took the quick profit. Now I'm starting to get some signs that there may be low latent liquidity now in this area and that they're going to rotate around 10 for a little bit. Let's see. It could continue, but because I was watching that 374 and going, well, I could try taking it there, but now I'm not so sure. Every popular platform will be a broker and clearing firm in the future. I don't know about that. Maybe a broker, but I'm not sure if it makes sense for everybody to be a clearing firm. I think that NinjaTrader did it because they thought they can do it better than what they were getting with Phillips. So I don't know. We'll see, I guess. You know, kind of like one of the big problems is the onboarding process, right? Like the actual getting the funds in the account. They want to get the funds in the account as quickly as possible. And Phillips' system is okay, but it's not quite as seamless as like Robinhood's is, right? Yeah, so there was a little bit of a push down and like right back to 10. So I think that what that does is that puts us in wait 45 minutes. So maybe around the top of the hour. So probably the next wave would be after the PMIs. So I guess our next opportunity to do something is maybe at PMIs. And in fact, actually 2 ticks higher. We are seeing the dollar moderate there a little bit. Yeah, I think probably we just sit tight. It is interesting to me how that there was that absorption and everything down here, and then how it really turned into a roller. But I don't know if I can really read too much from it other than that. Certainly somebody out, well, and you know, the timing of it was with that debt ceiling. So I do think that like the strong push higher wasn't necessarily, oh, like they reached regular session high, stop run on the highs. I think that was more the debt ceiling negotiations information. Forex Live saying Fed slogan does not talk on monetary policy or the economy. Draft Tucker Super PAC ceases activities after a legal threat from Carlson. That didn't last very long. I was kind of wondering, like, could Tucker Carlson run? Could they convince him? Maybe they could. No, guess not. I guess not. I think he's got bigger plans. He thinks that he's gonna usher in a new age of news on the internet. We'll see. He's gonna do it through Twitter. I don't know if Twitter's got the tools for you to be successful with that, but we'll see. Okay, I am seeing a lot of level 2 activity all of a sudden. Looks like the 30-year. Go back a little bit more. So now I'm looking at 3745 instead of 374. Yeah, good news, I've been approved for subscription status on Twitter. Okay, so maybe I can learn more about this from there. Subscriptions are a way for people's most engaged followers to help them earn money from Twitter for their contributions on the platform. When someone has a subscription offering, their followers can sign up to access bonus tweets created especially for them. Subscribers receive badges on their replies to the person they're subscribed to, letting them stand out in the conversation. People globally who meet the eligibility requirements can apply to participate in the subscriptions program. Subscriptions purchases are currently available globally on Twitter for iOS, Android, and web. Oh, jeez. None of those links work. Subscriber only spaces. Okay, that might be nice. Nothing's coming out of my nose today. It's all like dripping down the back and then I have to cough it up. I'm so sorry. Shouldn't talk about that. That's gross. Okay. Okay, you get to choose the price. 97% of the revenue. Whoa, wait. When you pay for access to someone's subscription offering, they can earn up to 97% of the revenue Twitter has earned from what you pay Twitter after in-app purchase fees up to 50,000 in lifetime earning based on Twitter's subscriptions creator terms. After 50,000 in lifetime earnings, they can earn up to 80% of the revenue. Oh, now that is interesting. So you get more, the smaller creators get more of the revenue. That is like inverted from what it usually is. Usually they give the larger creators a larger percentage of it. But even 80% is better than, like, that's better than what you would get on, like, say, Twitch. 30-year moving up here again. So it does appear to be a liquidity hole, but it's like a really wide one, and it hasn't been around for very long, so they may consolidate further around 10. Either way, I think I'm hands off for another 15 minutes. Yeah, how is Europe looking finance-wise better than the US? I'm not so sure about that. So the UK in particular seems to be like still looking at having big problems with inflation. So but they don't appear to be having as big of a problem with, say, regional banks and commercial real estate, for instance. You know, it's a really interesting situation. I feel like that there's a lot of creators out there that all they do is just bash on whatever it is that the Federal Reserve is doing, or whatever it is that policymakers are doing, and they don't ever game out for people like, what are the alternatives? What are the choices that they actually have here? Because when you look at this situation, it's really easy to make the Federal Reserve look like they're doing something really, really stupid. But I think the reality is that they have a tough choice, and that the options kind of suck no matter which way you do it, right? Because basically the choice is either raise interest rates here, keep inflation under control, and that probably eventually results in a recession that will probably further gut the tech industry and probably gut our regional banking and commercial real estate sectors as well. And you have a recession. It could be a really ugly recession because of the commercial real estate thing, right? That's a real problem. And that seems to be the path that we're headed on. Everybody criticizes them. But like, what's the alternative? Well, the alternative is to allow inflation to continue to run hot and gut the middle class and you know, erase all of the savings of the middle class, right? So if you're a regular everyday person, I think that it's probably better for you that the Federal Reserve raises interest rates, and just prepare yourself for a recession, and you know, hope that the damage isn't too bad, right? The good news for you is that somebody already made the decision almost 100 years ago now, right? Because the reality is that this is what the politicians put them in this situation. They're the ones that created the policies that resulted in this inflation, okay? And the Federal Reserve has a duty to maximize employment and price stability, right? And so they are there to raise interest rates to protect you from the politicians by raising interest rates, right? Everybody gets pissed off at him for it. I think it's kind of sad, but like that's the situation, right? I think that if you had a more liberal person at the head of the Federal Reserve, like maybe if Lael was in charge of the Federal Reserve, they would be all talking and acting tough, like they're going to act tough on inflation, and then not actually raise interest rates when it came down to it. And they would allow inflation to run hot, even at the same time claiming that that's not what they're trying to do. That's probably what would happen, right? But ultimately, well, maybe, I don't know if Lael would actually do that, but maybe because I don't think that she's that ideologically driven. But you know, you put the right Democrat in there, that's what they would do. But the Federal Reserve is supposed to be there to protect you from that. And they're doing their job, and they get the They get all of the complaints for it. People are mad at them QEing, not raising rates. Well, within this context, I'm kind of lumping QE and raising interest rates kind of all into the same category, right? Well, there's a real problem here where, like, it seems to me like that after the debt ceiling is resolved, that there's going to have to be some quantitative tightening, and it's going to hurt. And I don't think that the regional banks can handle very much quantitative tightening before they start breaking again. Right. But that's where I'm like, I kind of think that to sufficiently battle inflation, that you're going to have to do that. And how do you do that and not damage the regional banks so much that it just like irreparably sends our economy in a certain trajectory that I think would be very bad for everybody, where there are no regional banks? I don't know how you do that. But like I said, it's that, or let inflation run high and get the middle class, you know? I don't think that would be a good option, you know? Allowing 2021 to continue playing out for like 5 years, that would be bad, right? That'd be very painful. Well, they're kind of floating back up here. The buying that we saw, kind of like the stop run per se, has been retraced in cumulative delta wise. So like the volume positioning is probably similar to what it was before that rise. And they're kind of levitating again. So I don't know if the sell is going to come. But again, we got PMIs is probably the big, the thing we're waiting for. Oh, yes, I forgot about this. So Elon Musk is supporting Tim Scott for president. This Republican primary is going to be really interesting either way that it goes. Okay, well, let's come back here and see if there's any new... TikTok will provide Oracle full access to source code and algorithm in a bid to stay in the United States. Okay. Oh yeah, we're learning about Twitter. See how ADHD I'm being, man? Good grief. Which territories? Okay. Eligibility. In order for Twitter to make available and provide subscriptions to access your account and for you to be able to be paid a share of revenue, you must be approved. The eligibility requirements can be found here. The super follows policy. Beta eligibility requirements. You must be 18 years old, have a complete profile, a verified email, two-factor authentication, do not have a history of repeatedly violating Twitter's user agreement, you've not been removed as an advertiser, profile does not feature the identity of another person, brand, etc., etc. Your account is not state affiliated, you have a Twitter account that has been active for 3 months or more, you maintain 10,000 active well, I don't qualify. Oh, boo-hoo. You've posted 25 tweets in the past 30 days. What 10,000 does not? On Twitter, 10,000 does not that crazy. I don't think I'm anywhere close to that though, right? Yeah, I only have 348 followers. I wonder if that increases though if you get, well, no. What Twitter would need to do in order for me to be interested in using their subscription program, as opposed to like doing it through YouTube or Patreon or something like that, would be better discoverability. And I don't really feel like that Twitter does have better discoverability. Like supposedly Twitter, you know, in the beginning, people were going to Twitter saying that was like the best way to get discovered and get your message out. But I've never seen it work out like that. You can go out there and be very active and tweet a lot, and people just don't care. Like you just get lost in the noise. So I think that in order to, if Twitter wants to make that feature a big deal, they would have to go a little bit further. But it seems like their take is probably to get a few big guys in on it. So maybe they get enough big guys on it for it to become a significant thing anyways. Okay. But that's interesting. And I guess you can post full videos on it, right? Speaker McCarthy to House Republicans, we are nowhere near a deal yet. Yeah. I told Biden there would be no clean debt limit, no raising taxes, and must spend less money. Oh, okay, wait, there's a little bit more here. I need you to all hang with me on the debt limit. We are nowhere near a deal yet. Gotcha. I don't know, this range is a little bit wider than I would like. But we got like, what, 2 minutes? Yeah, 2 minutes. We're going to get S&P services and manufacturing PMIs. And then at the top of the hour, we have new home sales, Richmond Fed. Now this S&P flash PMI is not as influential, but I think that it is going to be here today. It's kind of in a position to be a little bit more instrumental than it otherwise would be. What? U-Haul crashes into Lafayette Square near White House. Investigators find Nazi flag. That was like 8 hours ago, though. Funny. Well, let's not say funny. That's kind of a weird story. Interesting, I haven't run into... Okay, so they are definitely pulling for this event. I'm going to be paying particular attention to that services PMI, which the expectation is 52.5. Yeah, it sounds like somebody that's either crazy or a false flag. Ooh. Okay, interesting. Okay, so for services, we got 55 spot 1 versus an expected 52 spot 5, but manufacturing was under expectation at 48 spot 5 versus 50, and the composite ends up being 54 spot 5 versus 53. I think services is more important here. Seeing services at 55 has me like, whoa, okay. The micros are not in line here. Do I have to hit him? I don't know. Okay, there we go. It's like I don't really want to do that today. Guys, let's fix that. That's a little bit better. Eventually the market maker turned back on and was like, okay, a bit up here. Am I nervous? Maybe a little bit. I wasn't so much nervous as much as, like, if I had taken another order in there, then I would be nervous, right? Ooh. And that was the thing, is I was like, it kind of seems to me like to get this thing to go, I might need to put another order in, and I don't want to do that. I don't want to add more risk to this in this current situation. No, I don't think so. I think where I get messed up is like if I take a loser and I sweat in it for a really long time, or I take multiple losers. Well, so far this does not appear to be working in my favor. Let me look at that. Ouch. Okay, just heard from a BlackRock analyst claiming, or their call is that the Fed will pause in the June meeting. So. Well, that was quite a bit of a suck back up on like liquidity hole sort of a thing. So I'd go with crazy, but I think crazy would have brought more than just enough stuff to back up the whole white supremacy threat to democracy narrative. Like crazy would have at least brought a weapon. That really is kind of like a weird story. What are you talking? You're talking about in the micros? The micros are really weird. Like there are definitely some big robots out there that are doing arbitrage and stuff, and then there's a bunch of smaller players. So you really have to be. I mean, I think it's good practice actually. You really do have to be cognizant of the spread and those kinds of factors in terms of, you know, when you take your trades and stuff. Okay, so they're pressuring 07.5 again, and there's a bit of an iceberg there. $5K. Long volume from 06 half is, yeah, I think you're right. I think that these guys that were buying up there earlier are still in there. Yeah. The people that like stopped out up here are out, but that doesn't account for the volume that was earlier than that. But the thing is we get back to 07 half and then there's iceberg there again. So there appears to still be some sort of a meta order buy in here. Very passive one. That seller at 115 is so clean. Oh, well. They're still hitting him at 07 half. From a delta / price perspective, I mean, that was a clean sell. I guess I don't understand what you mean. Okay, they cleared through it, and after they did, there was a little, they immediately cleared 07, so I don't know. You sold 110? Really? Well, you know what? If I didn't have the news coming up, I guess I probably would have taken that price too. But that would have only had me like 5 ticks more in the micros, so I think it's okay. What I got? Well, now that offer is like kind of trying to press it. It looks like, you know, so we've kind of come out of the range. There's probably still going to be a lot of liquidity for them that they'll have to clear in here. If they're going to continue moving, if they're going to move down to the lows and breach the lows. So I think it's still a tough battle for them, but for the time being, the sellers appear to be winning. The 5-year is definitely driving harder. Really, seeing a 55 on the surfaces PMI flash, that I think is a bit of a surprise. It wasn't without risk, but the delta turn in attempt. Yeah, but that probably happened because they didn't want to do anything before the news. Maybe it was still a justified to take it there though, wasn't it? Yeah, I'm more saying like, I'm just surprised that you were willing to take the risk on holding the position through the news. Right? Yeah, well, I definitely don't like the way it's... So, when we came back down here, below 07, well, let's say starting at 07 half, they definitely started to run into liquidity again, didn't they? And the 06, they can't seem to garner the sells below 06 to push that to a new low. Probably a little bit too soon to say, but oh, you sold the little pullback? Oh, really? Oh, okay, you're good. You're good. That was a good call. Yeah. You got in after I did. I took it like right after the news and sat through the pullback, and you were able to catch the pullback. That's amazing. I mean, I guess if you're, I'm still sitting here thinking maybe it's going to go further, but I guess if you already took it, congratulations are in order, right? That would be a really tough catch. Yeah, but I'm just really impressed that you caught that. I mean, it only you caught a really aggressive pullback and it only went one tick against you. So surely we must say that there's probably was a lot of luck involved in that, but that is still like a really amazing pick. Like that could not have gone better for you. Okay, so I saw a little bit of iceberging there at 06.5, even though it was only 298 that traded. Yeah, 9 times out of 10 that doesn't happen. Yeah, exactly. Okay, maybe now we're starting to see the liquidity hole stuff. I don't know about that. I think this is different because it seems to me like there's plenty of buy liquidity down there. Yeah, we do have new home sales to come up. I don't know if that one's going to be as big. Richmond Fed Composite Index. I've gone back and forth on the whole just kill the trade if it doesn't immediately go approach. I mean, I think you can give things some rooms, but you know, if you're intraday trading, it really should be like you should be seeing the flows that you're expecting relatively quickly after your entry, huh? I mean, you have to kind of adjust and give it some room to some extent because of how the treasuries are, but okay. So Graves is saying he doesn't think things are going well on the debt negotiations. And that just caused a spike. Whoa. What the what? What the what? Okay. Well, I'm just gonna scratch it. I need to walk away for a second. I mean, I could still be in it, right? I could stay in it, but I was not expecting to see more debt ceiling negotiation spikes like that. And that move, that volatility was a little bit too much for me. I am really shocked that I got out of that without losing anything. Okay, and now they're pulling the liquidity here for the news. Oh, did I get Richmond Fed Composite Index early? You see the liquidity in the micro is just gone now. So the Richmond Fed was worse than expected, right? -15 minus -8. New home sales was slightly better than expected. Actually, it was 4.1 versus expected -2.6. So that would also be bearish. There's still, yes. Well, he could be moving around, but there appears to be a meta order buy down in this area. Like he was there before, it came back. When it came back to him, they're there again. And it started at 07.5, and then when they got to 06, and the thing is that the market orders at 06 kind of just stopped coming, and so then the buyer bought it back up. So but that one's pretty passive, so that could be just about anything, you know. I guess the thing is that I thought between the PMIs and Fed job owning and everything that there would be a lot more people willing to sell out here today than there have been. And it looks like what is happening is they're too skittish about it because of the debt ceiling. A price chart, it's really hard to stay mentally dialed in all day. And it's just so true. This is where I don't really get the people that say like watching ZN is so boring and stuff. Well, it's just because you only care about when a price moves, but there's so much going on all the time. Yeah, see, look at that. I would be down again. That is, this chart in ZN, that is really erratic, right? You know, if it stops right here at 110 and comes down again, that would be kind of crazy. If it extends here and beats that high, that would be kind of crazy too. I mean, if it goes, then it could really go. But I think I should consider myself lucky. Look at those pockets where it's like you're gotta reading it and it only exists for 10 minutes and it's gone. Well, the thing is that the amount of times that we'll come in and we'll take a trade against the trend and only have it go against us like 1 or 2 ticks, right? That happens often enough on our winners that I don't think that it's just chance. But how could I prove it? I don't know. I think the whole thing is that you're coming in, you know what the flows could possibly be, and then you can kind of see those little spots in the flow where there's an iceberg or there's a good spot to catch the edge, and if you have that in your favor, that really helps your entry. Yeah. I might mess with it here on Sim, but I think that for my live account, it's time to turn that off. Like it didn't really concern me too much when I saw it going against me and everything, and like it came back and I was like, okay. I think this is a little too crazy. I should just scratch it. Do you trade only with the book like Navinder? So, I'm not doing the same strategy as Navinder, but Navinder was very much how I envisioned Navinder was probably doing it is, he probably had orders at every price, and like as it's ticking up, if he's deciding he's going to play it long, shall we do it? Because I do think it's long. As it ticks up, I'm going to add one, right?
Okay. Yep. But a lot of it is like your spot in the queue matters, right? You need to spoof the market too. Well, I mean, that's not how he started out, right? He only started spoofing the market because the robots started beating him in the queue, right? So, which, by the way, what I'm doing here should probably not end up being that great, right? And he was probably, you know, I'm doing it with one. He was probably doing it with hundreds. He was probably doing it in E-minis. That sell volume is still in it if it's like there's no clue if it'll turn back down. But if it, well, I'm going to say that in this situation, the most likely result is probably that it rebalances back around 10 again. But if it does pop out the upside, I think it could be violent. Yeah. If it pops on the downside, I think it could be violent. Like that trade that I had. Oh man, what was the most excursion I ever got? 8. He gave me 8 at one point. You know, but I thought, you know, not I thought, I was looking for it to break that range, you know, and if it had broken further than 06, then that could have been a really great trade, right? But it just didn't happen. No, Navinder is the flash crash trader. So Navinder Singh, he was the guy that supposedly was quote stuffing and kind of ended up triggering the flash crash, or at least that's the guy that they pinned it all on. And he was a guy that worked for Futex. Futex was basically the prop trading firm that eventually went under, and the Axia guys left and then created Axia. So if you talk to the Axia guys, they knew Navinder, right? He traded with them, and he was a market maker for a long time. And then the robots came along and started beating him, and so he started finding ways to screw with the robots, and he ended up getting prosecuted for it. And when they prosecuted him, what they found was that all of the money, supposedly at least, all of the money that he had made from the trading, because he had made millions of dollars, he gave it to like his hedge fund buddies, and they blew it all. So he didn't really have any money. So he went to prison for a while, and he's been out, and I don't know, I haven't heard anything about him in a while. I'd like to see him make a book or something. Let's come in here, search for him, and search for like the last, anytime in the last, let's say 6 months. Or let's just say 2023. Anytime in 2023. May, what is it, 9th? Or sorry, 23rd. Duh, we're like way further than the 9th. So silly. New York Post. That's right. The sentence was like home arrest for a year or something. And a big fine. I mean, so originally I was of the opinion that like he spoofed, he knew what he was doing, he got hit. You know, screw you for messing with us all. You deserve it. But after seeing how that all like ran out and everything, I feel really bad for him and feel like he kind of got a raw deal there. And like, honestly, if you were in that situation where these robots were effing with you, and you know, what would you do? You'd totally screw with the robots too, you know? So, and I also think that he is a person that, you know, I don't know if you were able to speak to Navinder, or he wrote a book like telling you everything that he knows. I think that you would have a hard time being profitable with it now, but it's still, in my opinion, valuable knowledge that I hope gets documented for future generations, you know? So I really hope that at some point he makes a book or something like that, or that we get the opportunity to talk to him and dive into his strategy. That'd be cool too. The market's been screwing that candle ever since. Yeah, well, like, look at the chart, man. It's just not like, I said it was a really messy looking chart. It hasn't gotten any cleaner in the past 10 minutes, right? But it does appear to have rebalanced around 10.5, like I suspected. So there's that. Okay. So I think that Navinder would probably be engaged this whole time in putting bids out and stuff. I kind of rested for a second because I didn't want to go higher than 5 or 6 contracts. So now that one of those got filled, I can put another one at 110. But the idea here would be, yeah, I would want to have a long at 110, but I would want to be like at the front of the queue somehow. Well, now I'm at the front of the queue at 13. I guess that means it went higher, right? Yeah, 12.5 was the high before. Ooh, the AC just turned on. It feels good. Okay, so I could choose. I like to choose these areas around these big orders because I know that big order can kind of like pin things. So like sometimes it's better to just get out before that all goes through. So I could. Yeah, actually I will, because there looks like there's an iceberg there. Okay, and now I can just let the last contract run, right? Oh, look at that. My cost basis ends up being 0.4 right at the low of the day. Okay, McCarthy, talk away. You can talk, say anything that you want now. I'm prepared. It won't be long before short sellers will be now. Do you see that whole thing where they were like, maybe we need to ban short sellers on regional banks, and then like they did all the reports and everybody said now that would like make things worse. The politicians, they always want to talk about it, but in the end, there's enough smart people out there that know what's going on to stop them from doing something that dumb. This is where it kind of comes back to this kind of, I don't know, unsavory discussion that we have. Like, you ever seen these this study where they said that like, when you look at public opinion versus corporate or opinion or what the corporations would like or would be best for them, the public loses basically like 80% of the time or something like that, and that the public voice really has like very little effect in Western democracy right now. That's a feature, guys. The money speaks, and because the money speaks, it prevents the politicians from doing anything that would be too economically destructive. Otherwise, you would have these socialists coming in and just taking things over all the time. Right? That's what happens in many other democracies, right? That don't have that kind of where the moneyed interests don't have that kind of power. Now, I'm not saying that it's a good thing overall. I'm just saying that that's the one benefit to it. And what is the cost of it overall? Because it seems like there are some situations where they're like government is picking sides and it's objectively bad for everybody else, and that's not good, right? But my job is not always necessarily to come in and say what is good and what is bad, what should it be or what should it not be. I mean, in a case where it's very clear what it should be, then of course. But sometimes all we can do is just understand what the situation is, right? And I think that that's kind of the case with how democracies work right now, is that like I don't think that there's anything that's going to change anytime soon, and so we just beware, right? But finance still has enough power out there that when Congress wants to do something that's too stupid, the finance guys talk them out of it. And as long as like the margin between Republicans and Democrats is fairly narrow and everything, we're probably still in that situation, in the place where like Democrats get a 60% majority in the Senate and stuff like that, then maybe you would have a problem, right? Look at the book Jiggle Jiggle as it climbs. Well, somebody's definitely come in buying here now, right? I kind of wonder if the sellers capitulated there, yeah? I mean, that would be a sit, because I was a seller, right? And when I saw more volatility about that, I said, well, whatever I think that the PMI means and everything else, it's probably not worth trying to trade while there's still all of this noise from the debt ceiling. So I'm nimble. I'm able to get out, right? Meanwhile, there's this other guy out there that's about 5,000 contracts short, right? Who might be bailing right now. Oh, for sure. Yeah, the orders from that far back, I don't know if we can read too much from them. The thing is that if we take another push up, then we have really strong volume coming in, right? At the moment, though, I'm kind of wondering. In fact, I'm going to take my last contract off up here, because this looks like an area where they're going to balance a little bit. It's probably going to rebalance here, and then they'll make another push, right? I shouldn't say rebalance. It's they're probably going to let the order book recover here. Oh, so I got distracted. Somebody released a book about Navinder recently. Lim Von Flash Crash. And that's basically what I see as of recent from Navinder. The thing you gotta keep in mind is that Navinder was a pretty socially inept, kind of autistic kind of guy. So, you know, that kind of style of trading just perfect for him. But he's not somebody that would be likely to want to, like, talk to us, for instance. So there's still a reasonable amount of level 2 activities, kind of making me rethink my it's gonna rebalance your comment, but I did get a good price, so if I had faded that, I don't know. So the thing is that, like, our opportunity, if I had taken it with my live account, I could have maybe gotten the equivalent of 10 half. But there was no way that I thought that it was just going to shoot up like that again, right? I think there was some headlines associated with that a little bit, so. You win this time, buyers. The European indexes are starting to look a little bit heavy. You know, and when I look at the S&P 500, that just looks like a real, you know, the Treasury's kind of resolved in a direction. The S&P 500 is still a grind. It's because FT is on vacation, right? With FT on vacation, they're not allowed to do anything too important now. That would probably be the opposite of what would typically tend to happen, but he's too big now. We can't do it without him. So I opened up a couple of stories earlier, and I was just like going back through them now. One of them was this story about the U-Haul that crashed into Lafayette Square. And all of the comments on Reddit are more arguing about whether or not it's a psyop. Well, or more specifically, it's Redditors saying it's stupid to think that this is a psyop. I think based on what I've read about the story now that they're probably right, but I just find it so weird that that's what they're all talking about. Whoa, what? Okay, so they ticked up there. I'm here's another one that I clicked on. So listen to this one. This is from Mirrors Still on our Reddit in r/day trading, titled "I'm Frustrated." Before everyone rips my head off, a quick background on my trading experience. I am 35. I've been looking at trading and the markets for 17 years. I've done everything from penny stocks to small caps to large caps to futures to commodities. I have traded options, sold naked options. This has been the closest I've seen to any kind of success. I've built intricate option plays where we collect a lot of data, but of course Vega is the enemy. I built and scripted my own multiple strategies on Thinkorswim. I once had someone let me play with $300,000 of their own money. They were a multimillionaire and didn't care to lose money. I have scoured the internet and YouTube for answers to find a winning strategy, only to truly know without a doubt that 99% of YouTubers are simply there to sell you a worthless program or service. Help, I need help. I am sincerely looking for help from someone that is truly making consistent gains. Give me something new to look at or to point me in the right direction. No hate. If you don't have helpful information or advice, move on. Thank you in advance. Wow. This guy has been on a long time. It's very interesting to me that this man has been doing this for 17 years and he still thinks that it will be somebody else giving him a strategy that's going to bring him the success. How do I write this in a way that will catch his attention? The US market is so ranging with no way to make money here with options. Well, sure, you could sell it maybe. The whole volatility picture continues to be a little bit frustrating, doesn't it? Dude, I called this in ZN really well. That it was like, yeah, it's because they've made the hole and they're gonna balance here. Well, I need to stop using the word balance. They're just gonna rest here, and maybe in 15 minutes they'll take another pop. The 5-year dropped back up there a little bit hard. I'm kind of wondering if this whole pop that we had is going to retrace now. And, you know, normally I would be like really disappointed that I didn't get anything out of that trade or anything, but given the situation, I think that was just kind of thrilling and funny. I guess someone was up there at 15, 16. Could be. It could have been the same people that bought, right? Either way, the delta that we saw on that pop has mostly come out. Oh, actually, no, I take that back. No. I need to zoom things in because it's a little tight. So let's try and work it out from here. Where's my pen? There we go. Okay, so we had this pop here that we did retrace. That would correspond to about this location right here. So there, and then after that pop, starting from, you know, the liquidity hole area type of thing, there's been a net about 5,000 bought and then sold. So this could be because it looks like the liquidity has not quite recovered. It hasn't been long enough. So this right here is probably square root law at work, right? So a little bit of rebalancing because of the weak order book, it came back. So even though it was selling, I don't know if you could say that it was like a big meta order sell or just profit taking or anything like that. But we still kind of have this situation where there could be some more volume to come out and it could push things back the other way. So, and again, if they were able to breach down here, I think it would be pretty violent. But once you get below this 08 half area, you're probably going to run into liquidity again, right? So there might be some downside, but it would probably take a bit of selling for them to get through that. I still think that the most likely scenario, though, is like, where's the next set of volume going to come from? I don't know if we can game out based on people's existing positions and everything, if there's volume to come out from that. And so the most likely scenario is that it balances somewhere within here, that it just kind of dies somewhere in here, right? Unless we got a piece of news like more debt ceiling talks, which seems likely to me at this point. And I do think that there will be sellers out there in the treasuries, but they're probably going to be higher time frame, more passive now, and so today is maybe not the day to play that one. That's what it looks like to me. But it still comes down to what information do I have that predicts future orders, and I guess I'm trying to say that my look right now is that I expect there to be less orders than there has been earlier today, which suggests that it's just kind of lie down and rest.
Okay. I typed up that little post. First step to success in trading is realizing that it is ineffective to try and derive edge from someone else's strategy. The market is competitive and there's only so much money available in any one trade. If a successful strategy gets even remotely popular, the edge gets sucked out of it by the market. After 17 years of trying to find edge from other people, you need to learn to develop the edge yourself. Start with an empirical approach. Ignore what other people say about their view of the market and only listen to the data. What can we truly prove about the market empirically? There are many research papers out there with such information that you can start from, especially if you look at the trading and market microstructure section of Quant Finance. You can then take that base knowledge and attempt to take the research a step further to find edge. One key piece of advice I will give is to look for informational inefficiencies. Most retail traders start out with the assumption that all available information is already baked into price, and therefore they base their strategies almost entirely on the analysis of price, aka technical analysis. As orders have strong impact, the market arbitrages out statistical inefficiencies very easily. However, the market is not very informationally efficient. Passive flows from index funds and the like can move us far away from fundamental value. So look for information that could predict future imminent orders rather than studying charts. We'll see if that helps him. It's a good test case to see if my way of explaining things is effective. Right. Because I know that the information that we have is effective, but I don't think that my messaging is very effective sometimes. So. Let's see. I should probably recenter my DOM here, huh? I want to be centered around 110. Here is a video series from 2 years ago about financial market microstructure. Oh, wow. This is long. Each one of them is an hour. Holy crap. This looks like this could get into some of the stuff that we know about. I'll have to bookmark this and try and watch this for you guys. I already have tons of stuff like on my plate that I should be researching, but that one I think probably jumps to the top. Okay, so for today's title, debt ceiling headlines. Results in market slog. So this is a messy market. Now we'll call it messy market from debt ceiling, intermittent debt ceiling headlines.
Unless you guys have a better idea for a title. What's this looks more like Biz just got bored and started pulling down. I think that the liquidity through that area was a little weak, right? The liquidity to 111, let's say, was kind of weak, right? Again, let's see here. I think I have my tool here to really help you with this, but so if I do like time extensions. And we're gonna say it was actually to there, I think. So I'm trying to game out based on what I'm seeing here in the cumulative delta, where the meta order actually ended at. Let's put it there where there was a spike. Do you see that little spike there in cumulative delta? Okay, so if the meta order was this, then you wouldn't expect the market liquidity to recover until here, based on the 3/5 law. So, but you can see that the orders started selling before that, and as a result, they had strong impact and came all the way back. Right. I don't know. I think there could be another leg of meta order though. Like it's been long enough now. They might do it. They actually are up 2 ticks, right? But I'm not going to touch it. This is I feel like this market's was a little too dangerous for me. Let's come back here and see if Zero Hedge has any kind of synopsis of all of those headlines that we got. German investigators find Nord Stream evidence points to Ukraine. U.S. services PMI soars to 13-month highs. Manufacturing tumbles back into contraction. The White House and GOP negotiators plan to meet again on Tuesday at 11 a.m. Eastern Time to continue negotiations for a month-long impasse over raising the nation's $31.4 trillion debt ceiling before default occurs. Oh, so like in 5 minutes. So you might get more headlines as they enter the meeting. Republicans say that White House isn't negotiating in good faith, and the House Financial Services Chair Patrick McHenry saying on Tuesday that he's not sensing any urgency from the White House, which waited months to arrive at the bargaining table at the 11th hour. I think it's very important to realize that urgency should be the word of the day, and that's not the vibe I'm getting. I think that the highest levels of the White House, they don't understand the contours of the things that we understand, and that the House and Senate Republicans are aligned. Republican Garrett Graves, who authored the House GOP's opening bid on permitting reform, says that Republicans in the White House are so far apart on a deal, with the Biden administration offering to freeze federal spending at current levels, while McCarthy wants to go back to 2022 levels, a difference of roughly $130 billion. After a Monday night meeting between President Biden and House Speaker Kevin McCarthy, and their third meeting failed to produce meaningful progress, White House aides headed back to Capitol Hill for further talks throughout the night. According to Punchbowl News, McCarthy said he told Biden that there would be no agreement to a clean debt limit deal, which wouldn't include spending cuts, and that he won't agree to raise taxes. The government needs to spend less money, he said, telling Republican lawmakers that we are nowhere near a debt ceiling deal yet.
That said, McCarthy on Tuesday told GOP reps to be able to vote within 24 hours, according to Representative Hearn. Okay. Within 24 hours. Okay. Meanwhile, the Treasury Department has asked federal agencies if they can delay payments. The Washington Post reports, citing two people familiar with the matter, as the Biden administration looks for ways to limp things along until a deal is struck or June 15th quarterly tax payments roll in, buying Congress a bit more time to negotiate before the so-called X date when reserves run dry. According to the report, Treasury officials have asked whether there's any flexibility for payments due before early June, though the Treasury has not asked any agencies to postpone payments beyond that. On Monday night, the House Appropriations Committee canceled planned markups of 4 FY 2024 Republican drafted spending bills, the panel announced at midnight on Monday. Okay. So I gained a couple of things on there. I did not realize they were meeting at 11, and I did not realize that the news of a deal could come through like very quickly. If news of a deal did come through, I would want to buy rates here and maybe perhaps see them at 4%. Maybe not like overnight, but you know, that would be like the swing. Oh boy. Okay, on the Nord Stream thing, BKA, that's the German's Federal Office of Criminal Investigation, are now focusing on a yacht that sailed from the German port of Rostock weeks before the explosions. That 15-meter yacht, the Andromeda, was hired from a Polish company and docked at a tiny Danish island near the blast site. Most strikingly, investigators found traces of military-grade and underwater deployable explosives on the vessel. Given the complexity of the operation, BKA believes the government must have backed the undertaking and has found evidence pointing to Ukraine via a shell company, a travel agency formed by two Ukrainians in Warsaw. According to the team of journalists, the purported travel agency is one of more than 100 entities listed at a single address. In 2022, the travel agency, which had a Ukrainian woman named as president, received about $3 million for no documented reason. According to the BKA's working 35 men and one woman with forged Romanian and Bulgarian passports entered Germany before using the yacht as a base for expert divers who planted the charges more than 200 feet below the sea. Germans have identified two other people, Ukrainians, who were aboard the vessel. Journalists say one of them is a Ukraine infantry veteran. Okay, it is an intriguingly detailed scenario and quite different from Seymour Hersh's own blockbuster account, citing unnamed national security sources. The legendary investigative journalist reported in February that the United States blew up the pipeline in a plan crafted by the CIA with the cooperation of Norway and executed by U.S. Navy divers deploying from a Norwegian mine hunting vessel. Meanwhile, Hersh has just reported that Ukraine's neighbors are quietly pressuring Zelensky to find a way to bring the 15-month-old war to an end, with some apparently willing to compensate him personally for doing so. Well, the treasuries did kind of bounce back up here a little bit, but they got stuck at this other kind of area that was a little bit of a balance shortly after the trade, so can't read too much from that. I do wonder, you know, there was a headline that screwed us up. I do wonder if that hadn't happened, if we would have continued to sell. Or if the buying that came in was going to come in either way. Is that ET, what, on my DOM? No, I think it's just regular session. Listen, I don't care about this stuff about like the difference between the RTH and ETH profiles and all of that stuff. I just want to see the volume as it accumulates at a price. So, anyways, That's it. I think we already got a good title and everything, so I guess I will see you guys. Not really. Honestly, if it happened more than 45 minutes ago, it's doubtful that it's relevant. Okay, gotta go. See you tomorrow. Stay excellent, team.